Welcome to the deep dive. Today we're getting into the latest financials from United Spirits Ltd.
That's Diageo India, a really big name in the beverage alcohol scene here.
Exactly. We're looking at their audited results for Q4 and the full financial year that just ended March 31st, 2025.
And we've got quite a bit to work with here. There's the official stock exchange notification, the press release.
Right. Also, the full standalone and consolidated financials, the investor presentation, and even some analysis questions. A good set of sources.
Definitely. So our mission, if you like, is to pull out the really important stuff from all this material.
Yeah, to go beyond just the headline numbers and understand, what's really driving their performance and maybe what's next.
To give you a clear, concise picture of their financial story right now.
Okay, sounds good. Let's jump right in. What did the overall financial picture look like? Top line first, maybe?
Sure. So for the full year, FY25, their consolidated net sales value, NSV, came in at INR 12,069 crore.
And how does that compare?
That's up 6.6% compared to the previous year. Pretty solid.
Okay, and the last quarter, Q4.
For Q4, consolidated NSV was INR 3,031 crore. That's an 8.9% jump year over year. So a bit of acceleration there.
They also mentioned an underlying NSV, right? What's that about?
Yeah, they adjust for some specific items, things that aren't part of the regular business, to give a clearer view of sort of core performance.
And how did that look?
On that underlying basis, the full year growth was 6.9%, and Q4 was even stronger at 10.2% growth consolidated.
Got it. So healthy sales growth. What about profitability? I saw some big jumps in EBITDA mentioned.
Absolutely. EBITDA, earnings before interest, taxes, depreciation, and amortization that showed even better momentum.
Much better.
Well, full year consolidated EBITDA was INR 2,243 crore. That's up 12.1% year on year.
And Q4, that seemed like the standout.
It really was. Consolidated EBITDA for Q4 hit INR 460 crore. That's a huge 37.7% increase compared to Q4 last year.
Wow, almost 38%. The CEO mentioned leveraged growth, I think.
Yes, particularly in the standalone results. Leverage growth just means, profits growing faster than sales.
Which usually points to good cost control or better margins, right?
Exactly. Efficiency gains, pricing power, maybe a shift in product mix towards more profitable items.
So how did this translate down to the bottom line, the profit after tax, or PAT?
Yeah, the PT figures look pretty good too. Consolidated PAT for Q4 was INR 421 crore.
And for the full year?
Full year consolidated PAT was INR 1,582 crore, which is up 12.4% year on year.
Okay. And you mentioned standalone was even better?
That's right. The standalone PT growth for the full year was actually 18.8%. So the core Indian business seems particularly strong on the profit front.
Right. And for investors tracking this, what about earnings per share, EPS?
Okay, on a standalone basis, the Q4 EPS was INR 6.20. Up from INR 5.28 in Q4 of the previous year.
And the full year?
Full year standalone EPS came in at INR 21.42 compared to INR 18.04 in FY24.
They also gave a pre-exceptional EPS number?
They did. It strips out those one-off items we might touch on later. And yeah, that also showed decent growth for both Q4 and the full year. Shows the underlying business profitability is improving.
Good stuff. And any news for shareholders directly? Dividends?
Yes, there was. The board recommended a final dividend of INR 8.0 per share for the 2024-25 financial year.
Subject to shareholder approval, of course.
Naturally. But it signals confidence and a return to shareholders.
Okay, that's a solid overview of the big numbers. Now let's try and unpack where that revenue came from. The standalone segment performance seems key here.
It really is. The story there is very much about their prestige and above segment, or P&A as they call it.
The premium stuff?
Exactly. That segment was, the real engine. NSV growth there was 13.2% in Q4.
13.2%. And for the full year?
Still strong. 9.9% growth for the full year.
And what's really interesting is how much of their business this represents now.
Right. It accounted for, get this, 87.7% of their underlying net sales in Q4.
Almost 88%.
Yeah. And 88.5% for the full year? That share has actually increased by over a percentage point compared to last year.
So it's not just growing, it's becoming an even bigger part of their business.
Absolutely. It really points to that premiumization trend, doesn't it? People trading up, wanting higher quality brands.
You'd think rising incomes, aspirational consumers,
Yeah.
it all feeds into that.
Precisely. It feels like a fundamental shift in the market that they're tapping into very effectively.
Okay, so if P&A is almost 90% of the business, what about the rest, the popular segment?
Well, that segment saw much more modest growth. NSV was up just 1.1% in Q4,
And the full year.
only 0.8% growth for the full year. So quite flat, really.
And its share of the pie is shrinking then.
Naturally, it accounted for about 10.5% of net sales in Q4 and 9.7% for the full year, down about zero point 0.7 percentage points.
So the strategy seems clear, focus on premium.
It certainly looks that way based on these numbers.
I also saw a note about Andhra Pradesh. They re-entered that market.
Yes, back in September 2024. The press release does mention that this contributed positively to growth, especially on the standalone side.
So market access still matters, obviously.
Always. Getting your products onto the shelves in key states is crucial.
Okay, so P&A driving growth, popular segment stable to slow, and market re-entry helping. Let's switch to costs and margins. How did they manage profitability?
Well, starting with gross profit, on the standalone side, that grew nicely, up 13.4% in Q4 and 11.5% for the full year.
And the gross margin itself, the percentage.
That expanded too. It
Yeah.
reached 44.5% in Q4, which is up 115 basis points year on year.
So 1.15 percentage points better.
Correct. And for the full year, the gross margin was 44.7%,
Yeah.
up 129 basis points, so nearly 1.3 percentage points up.
What drove that improvement?
They put down to a mix of things. Better pricing, what they call revenue growth management.
Which is essentially optimizing pricing and promotions, right?
Yeah. Getting the most value out of each sale. Plus, they mentioned Kajia's productivity efficiencies and production costs.
But there was an offset.
Yes, E&A inflation. Extra neutral alcohol, a key input cost, went up, which partly counteracted those gains.
That E&A cost is something to watch then. Could be an industry-wide pressure.
Could well be. It definitely impacts their cost base.
So despite that input cost pressure, they still managed to expand gross margins. What about spending on brands, advertising, promotion?
They kept investing there. The A&P reinvestment rate as a percentage of net sales was 10.8% in Q4.
Quite high for the quarter.
It was. For the full year, it was 9.7%. So they're definitely putting money behind the brands to support that premium growth.
Makes sense. So improved gross margin, continued brand investment. How did that flow through to the EBITDA margin?
That's where you really see the leverage. The standalone EBITDA margin expanded significantly. In Q4, it was up 358 basis points year on year.
Wow, over 3.5 percentage points.
Yeah, it hit 17.1% for the quarter. And for the full year, the expansion was also very healthy, 181 basis points.
Bringing the full year margin to
17.8% on a standalone basis, driven, as we said, by the gross margin gains and other value chain efficiencies.
very strong margin performance. Any other cost items worth noting? Interest, maybe.
Yes. Interest costs on the standalone side actually dropped quite a bit in Q4, down 24.1% to INR 22 crore.
Okay, but the full year.
That's the slightly odd part.
Mm.
For the full year, interest cost increased by 17.1% to INR 89 crore.
Why the difference?
They mentioned it's related to some customary non-debt items, basically accounting adjustments to the full year figure, not necessarily higher borrowing costs throughout the year.
Got it. Okay. What about those one-off items, exceptional charges?
Right. There was an exceptional charge this year, FY25, INR 65 crore, hitting both standalone and consolidated results.
What was that for?
Mostly related to their ongoing supply agility program, basically, making their supply chain more efficient, and some severance costs from closing a unit.
Okay. Restructuring costs, essentially. How does that compare to last year's exceptionals?
Last year, FY24 was different. They had exceptional income from selling off a bunch of their popular brands.
Ah, the slump sale.
Exactly. But they also had costs last year related to this same supply agility program. So there's some continuity in that program's costs appearing as exceptionals.
Right. So ongoing strategic shifts reflected there. Let's zoom back out to the consolidated view. Any specific things impacting those numbers apart from the core business?
Well, one interesting point they flagged was the IPL schedule.
The Cricket League, how does that affect United Spirits?
They own the Royal Challengers Bengaluru team, RCB. And apparently, RCB played fewer matches in the January quarter this year compared to last year.
Ah, so the revenue from the team was lower in Q4?
Seems like it. And that slightly dampened the consolidated underlying growth figure. It's a good reminder of their diversified interests.
Yeah, it's not just about the beverage alcohol side when you look at the consolidated picture.
Definitely not. The consolidated results obviously include all their subsidiaries, Indian and overseas, plus their share of results from joint ventures.
Which ones did they mention?
They listed Neo Spirits, Inspired Hospitality, V9 Beverages, and Indie Brews and Spirits. It looks like they have fingers in a few different related pies.
And they separate the revenue streams.
Yes, they show net segment revenue for beverage alcohol and for sports activities separately in the detailed financials.
I think I also saw something about their overseas subsidiaries being rationalized.
You did. They mentioned an ongoing rationalization process. For some overseas units, they're even preparing accounts on a liquidation basis.
Sounds like some cleanup or restructuring internationally. Did it have a big impact?
They stated it didn't have a material impact on these financial results, but it suggests they're actively streamlining their global operations.
Okay. Now, there were also some notes about older issues, historical legal matters. Still lingering.
Yes, a few things are still mentioned. The main one is the additional inquiry into potential past fund diversions.
This has been around for a while, hasn't it?
It has. They reiterate that amounts identified have been provided for or expensed, and they're pursuing recovery through legal action. But, it's still noted in the reports.
A legacy issue to keep an eye on. What about the IDBI bank dispute?
Still ongoing. It's about a prepaid loan and pledged shares in the USL Benefit Trust. They believe INR 46 crore is potentially recoverable.
Another unresolved legal point, and there was arbitration mentioned.
Yes, 2 points there. One is an ongoing arbitration with an institutional customer over withheld payments. Management sounds confident they'll recover the money.
And the other?
The other relates to UBHL. An arbitral award in United Spirits' favor was challenged. That challenge was dismissed. But now UBHL is taking it to the High Court, so still in legal process.
So several legal matters ticking along in the background. Important context for investors, I suppose.
Absolutely. While these state provisions are made for the known inquiry issues, legal outcomes can always be uncertain. It's part of the risk profile you need to be aware of.
Definitely. Shifting gears a bit, did they mention anything on the sustainability or social responsibility front?
They did, yeah. In the investor presentation, they highlighted their program focused on curbing underage drinking.
Oh, right. Responsible consumption.
Yes. They mentioned reaching about 1.2 million consumers with educational messages on that topic, so they're highlighting their efforts there.
That's certainly an important area for their industry. Okay, finally, let's look ahead. What's the outlook? What did management say?
The CEO's comments were generally positive, emphasizing a focus on sustained growth and long-term value creation.
Standard corporate speak, maybe?
A little, perhaps, but they also specifically noted that they've achieved their medium-term EBITDA growth guidance, so hitting their targets.
That's a more concrete, positive signal.
It is, and for anyone wanting more detail or to ask questions directly,
There's an investor call.
yes, they scheduled a Q&A conference call for May 23rd, 2025. So more insights might come out of that.
Okay, good to know. Right, let's try and pull this all together. What are the main takeaways from this deep dive?
Well, I think the clearest message is the strength in the prestige and above segment. That's really driving the growth and the margin expansion.
And that margin expansion itself is key, fueled by cost discipline alongside that premium shift.
Definitely. Disciplined cost management is evident. Plus, you see these ongoing strategic moves, like the supply chain program, the market re-entries. They're actively shaping the business.
We also need to remember the external factors, though.
Absolutely. Things like the overall demand environment, even the IPL schedule affecting the consolidated view. It's not all purely internal execution.
True, but the core strategy seems unwavering.
Yeah.
Premiumization and long-term value.
That certainly seems to be the narrative reinforced by these results and their commentary.
So here's something for you, our listener, to think about. With consumers clearly favoring premium spirits and United Spirits leaning hard into that trend, how might their position in the Indian market change in the coming years?
Yeah, and what role will those other ventures, like the sports side, play? Will they complement the core business or become more significant in their own right?
Lots to consider. We definitely encourage you to check out the full reports and presentations on their website if you want to dig even deeper.
For sure. Thanks for joining us for this deep dive.